Hello and welcome back to my YouTube account, James here as ever, for another ACCA review of a past question from the financial reporting examination. This is on Bun Co as well, so as ever I put the details in the description below so that you can follow it through as we go through it. But if you're new to the channel, welcome as ever. This is completely student-led, 100% ball is in your court on this one, and today's video is dedicated to Brenner. I know you're listening out there. Drop me a message on LinkedIn. If you've got any questions or things you would like me to go through for your ACCA exam coming up, put it in the comments below. I answer absolutely every single one of them. And if you want access to all of my tips, tricks, and examination revision notes, the whole shebang, then all you need to do is subscribe. There's a button down at the bottom and you have access to all of them. So as I said, we're going to be going through the Bun Co company today, and we'll be going through it top to bottom, question analysis with the answers. So even if you're not actually doing the financial reporting exam, there are so many tips and tricks in there that you can apply to your examination. This is exactly the same format and preparation I did for every single ACCA exam that I took, and it led to me becoming qualified. Nice and easy. So I think we better get stuck in. Let's get on with it. So, this is the question you have access to if you click the link in the description for this video. It is for the Bun Company Limited, and we're going to go through the actual question analysis now with the answers, analysing it top to bottom. And like I said before, even if you're not doing the financial reporting exam, by watching this video you're going to pick up on so many tips that you can transfer into other areas that are going to benefit you. Well, this is the document that you're able to see, but surely, come on James, what have you got? Nah, there we go. That is a proper question analysis as to key things that come up. So we're going to go through these top to bottom so that you can actually note it down. So maybe have a little stop of this video, see what you actually get down, and then we can review it. And then we'll go through it one by one. The first key thing, when you've got a question, the best place you go to, first of all, is straight to the requirement. So on here, I've actually put on some keynotes we're going to quickly go through straight away. First of all, as you'll see from loads of my other videos, there is 1.8 minutes per mark. So as you can see on the side here, we actually only have just over 12.5 minutes for Part A, 18 minutes for Part B, and just over 5 minutes for Part C, giving us a total of 36 minutes for the actual question. And then as we go through the requirement, there's so much analysis you need to do on here as to guide you to getting the big marks on it, or even potentially full marks. First of all, notice how I've got 1s and 2s above the requirements on there. The reason for doing that is so many students only answer one part of the question. But as you read it through and you actually put a number 1 over the first bit I need to answer, and then a number 2 over the second bit, straight away you're going to be answering the majority of all of the question, and you've got the best possible chance of getting the actual marks on this. So question number 1, adjust for the information in note 3, highlighted note 3. I'm thinking straight away when I come to the requirement, I've got to highlight note 3, that's the first thing I've got to talk about, and calculate the 2007 sector average equivalent ratios for Bun Company. It gives me a trigger there to say there's going to be some ratios calculated in this question, and I've got to compare what ratios the actual sector average has got versus the Bun Company, but we don't know the Bun Company. So we're just got to work out what ratios are given already. We'll have to check the analysis. On to Part B. Assess the financial performance and position. 1 and 2. Got to talk about performance. Got to talk about position. For the year ended 31st December 2007. So we've got the actual year. And in comparison with the actual sector average. So you've got to be thinking there, okay, well, we're going to have to talk about performance, position, and then an overall conclusion as to, well, are they better or worse? What can we advise? What can we recommend for going forward on this? Coming on to Part C, explain 3 possible limitations. I'm thinking 3 straight away. I've got to go over to the marks, because if it's 3 points and it's 9 marks, each of those are going to have to be really in detail. Whereas it's 3 limitations for 3 marks, probably 2 sentences, maybe 3 will get me 1 mark on that as well. So 3 possible limitations of the comparison between Bun Company and the sector averages provided. So what limitations have we got? So that really sort of sets the scene for us now, going back to the actual question analysis. So we've already got a few triggers in mind as to what we need to be looking for now. So let's get stuck into it as we go through. So first of all, in the opening paragraph, this really sets the scene for the actual question now. So we've got Bun Company as a bakery which owns 2 shops and cafes. So straight away I'm thinking type of industry, type of product, and the scale of operation. So how big are they? Next thing is, over the last 2 years, that is our time frame, the company's experienced a decline in profit, so things are going bad. What about the industry performance, I'm thinking? Due to an increased competition, so we understand why this is happening now, and so the directors wish to investigate this. Who's going to be held accountable as to, is it going to go better, is it going to be going worse, if this is a sector-wide problem. So this is where the comparison now comes in. Consequently, they have acquired equivalent ratios for the sector. I've seen that in the requirement. That should be the alarm bells ringing for you that these are the ratios I need to calculate, and have produced the figures below. So the next trigger in this question analysis that I picked up on was, first of all, not the same year end, 30th of June 2007 versus the 31st of December 2007 for the actual Bun Company. So, is that a limitation, would you say? Not having the same year end? Is that comparable? Well, the other thing to pick up on was over here, we've got 5 ratios over there. So we've got the ratios for the industry, now we've just got to go calculate them for the actual company. So the triggers are there as to the layout. We'll come on to the answer analysis after this later on into the video, how I think you should be approaching it, and how I've even amended the answers as well. So we'll see what you think of that, but it's just the sort of levels and the standards that I sort of expect of myself on it as well. But as we move down further on here, so this is now the actual information. Notice how I'm trying to cut it off, so we see, eyes on the prize that we're just looking for the Bun Company, and we've got the income statement and the balance sheets. As I put on the side, careful to separate out Bun Co and the sector average. Don't get them mixed up. That actually came up in the external examiner's report, and I put the link to that video in the description below. I'd highly recommend to check that out because it links into this video you're watching now. So here you've got to use those figures on the side in terms of to calculate the ratios. You need to also memorize the ratio formulas. So this comes with practice papers, and getting it wrong. It's okay to get it wrong, but you've got to show all your workings. We've got other relevant information at the bottom on here as well. So I'm thinking to myself, I've heard note 3 in here, and I've put a note on the side there, highlighted note 3, needed for requirement A. Something in that note 3 we've got to refer back to. So the other relevant information, just to talk it through now, 2006, Bun acquired a popular brand name. Some there going, that's an intangible asset. Remember, tangible is something you can touch. The property is fully paid for as well. But the brand represented 20% of the non-current assets, and the remaining 80% non-current assets comprises of property which Bun Company operates in its bakery and shops. So that's quite heavy in terms of property, plant and equipment, and that could be quite a solid foundation for the actual company. We also have on here in the year ended 31st December 2007, Bun Co began offering discounted meal deals to customers. Okay. Is that going to actually operate well? Bun Co hoped that this strategy would help to reduce the perishable inventory. Okay, remember, type of product, we talked about it before, and to reduce inventory holding periods. So in essence, that sounds pretty good, so that inventory days should technically be going down as a result. So that sort of gives us a flavour for that bit there. For note 3 now, and again relating to requirement A, we've got January 2008, it was decided to discount some slow-moving seasonal inventory which had a selling price of $1.5 million. Under normal circumstances, these products have a gross profit margin of 20%, so that's an actual increase in it. The inventory was sold in February 2008 for 50% of what it had cost Bun Co, okay, to produce it. So this is where I'm thinking, hang on, we've got 2008 on here now. We've got different dates. So this is an event after the year end. Triggers should be going in your mind now saying, I've heard of that standard before. I've got to talk about it as well. So what in IAS what is the standard that I can refer to there? We've got to calculate the actual required gross profit margin, and then at the end of the day on this, we've got to say, well, have we overstated it or have we understated it? That's the key thing that we've actually got to look at there. For the financial statements for the year ended 31st of December 2007, were authorised for issue on the 15th of March 2008. So automatically that's telling me it's after the year end, it's after the reporting period. So those are the sort of levels of actual analysis that I'd be thinking going through the question. So now we need to actually have a look, say, well, what about the answers now? How does this relate into? So again, pause the video, have a look through it yourself, have a go, and then listen to my recording as we go through it. I'm just going to flick onto it now. I'm in the mood. Racing through it. So these are the actual answers that you'll be able to have access to, available on the ACCA website, and past paper examinations are fundamental. But, I mean, come on, you've got to expect me to come out with better than this. I mean, what's going on? James, why am I watching this video? Come on, where are your notes? There you go. What more were you expecting? You know, this is the standard we've got to get to. So these are my notes for the actual question analysis. Let me ping it up to the top. This is what we're looking for. So first of all, again, make a note down, pen and paper as we go through. First thing, question 31, this is, again for the Bun Company, we're going to go parts A, B and C. First thing I've underlined on there, adjusting event in accordance with IAS 10, events after the reporting period. We picked up on that 2007, 2008. It's an adjusting event that we need to be aware of on there. So adjustments are going to be required. This is where it's going to be fundamental you actually show your workings as you go through. We've got the gross profit margin in there, so as you can see on here, it costs 1.5 million, gross profit margin of 20%, so that means the gross profit margin was 0.3 million. So this alters the actual closing inventory. So the actual value of the goods was only 1.2 million, as it was stating in the actual question itself. So the sales price, remember from that note as well, it was half of the value. So half of the value was 0.6, 50% off. But the key thing to remember here, even if you'd have got that gross profit margin wrong, okay, even if you got it wrong, if you'd have actually attempted with your own figure 50%, showed the marker, showed the changes, you'd have got your own figure marks carried forward as a result. So I can't stress enough how much showing your workings is key and critical in this, and it came up in the external examiner's report, which I've done a review on, so please make sure you watch it. The details are in the bottom. It's in the playlist for this module. So as we come down now onto the actual ratios, this is the recommended approach that I'd be taking. So if you're going to be doing this as a computer-based examination, or if we're back to pen and paper, this is the sort of layout, as you can see from the black lines, I used to do as a student and I recommend as a current lecturer now as well. So first title on there is the actual ratio name. So take these from the question analysis that we went through. Secondly, it's actually showing the ratio workings and the formulas in that separate column as well. So you've got first column here for the ratio name, second column, ratio workings with all the figures, third column on here, actually your answers, the fourth one on here for the sector average, because remember we've got to compare one to the other, and then this is where I've amended it on the end. Really good exam technique, not just for this, but it applies to audit papers and others as well, and in financial accounting. Other types of questions, pop on the side in your ratio analysis when comparing one to another, was this good for the actual company we're referring to? So Bun Company, was this good? Are we better or worse? This makes a heap of difference when we come on to part B now, because we know we can quote our figures from the ratios, and it's a trigger in the exam to say this is better rather than worse as well. And in this case we picked out that 4 of the ratios tell us that things are better at Bun Company, whereas the one thing that is worse is the inventory holding period. Remember, perishable goods, it's a bakery, and the strategy they actually try to implement as well. Notice the technicalities we're going into. This is if you're going to be getting top marks on this question, and this is the standard of analysis that, for me personally, I expect when I go through it as well. And it's all to benefit you, because once these all start to add up, one more mark, another half, and you're going to be getting closer to passing this exam. Trust me on it. So if we come on to part B and notice how this now comes into my question analysis. We've got the 1 there for the profitability and we've got the 2 there for the position as well. So this relates to if we had good question analysis, we're now following the actual answer analysis as well. We're going to pick up on those areas. So the key thing to get noted down now, really important this. So we've got a pen and paper, exam technique for ratio analysis and explaining. First thing you've got to state is, are we in a better or worse situation? So as you can see up at the top here, quoting some of the figures from the actual return on capital employed and the operating profit margin. So 31% difference in here, so 18.6 is your 18.6. Working out the percentage difference, on there. Okay, so that's telling you, are we better or worse? Quoting the figures. And then secondly, show why. So how much has it gone up and how much has it gone down by? And then thirdly, the details as well. So notice in the actual sentence at the bottom here, not directly comparable. There was a revaluation surplus, more efficient competitors. These are potential details as to why. As we keep on going down in terms of profitability now, point 4 in terms of the actual exam technique is using your figures. So this is where the own figure rule comes into it again. Even if you've got some of the ratios wrong, but you've interpreted them correctly, you will get the marks for it. It's all about carrying them forward and carrying them through. 5th, again, this came up in the actual external examiner's report. Students have got to apply it back to the scenario that it's a bakery, applying it to the sector averages, and what type of business and what scale are we referring to on here. And 6, and finally, analysing why with a conclusion. So overall from the conclusion, what does this mean overall? So how are we actually improving the business as a result? Just having a look on the actual ratios on here. So what can we actually control in terms of reducing the inventory days? You can actually pause this video and get all the key aspects on here that I've underlined. Some of these are the key trigger words as to following that actual format and process. So maybe trying to get better control over lowering costs. Again, details as to why. One may have a different perspective, so do we actually own the property versus leasing and payments in terms of rent? So that has an impact on costing and on a more sort of flexible basis as well. So just have a little read through, have a little go through yourself, but that is the format and the technique you need to be applying. Coming on to the financial position now, we've got on here the type of goods, again, perishable, what kind of impact, what kind of competitors have we got on here in terms of the gearing as well. So what they're saying there in terms of the gearing, if I just scroll back up to the actual ratios, and saying, look at the sector average at 80%. That is massive and high. Yes, we are lower in terms of it, 44.6, okay, but overall that is still high. Those interest payments are going to be eating into our profit as well. So other details to be thinking about. Concluding points you may definitely want to consider. You've got to be comparing one to another. Okay, so why is it declining in profit? Are we in a strong position, and have we got better profitability? Stating according to what you've worked out why that is the case. Is it a opportunity or potential concern? What strategies, forecasts, short term, long term? These are the buzzwords a market is going to be looking for in an analysis as well. Talking about the type of assets. Is it difficult to confirm? Future borrowings, you've got to actually come up with potential scenarios as well, but it shows your business acumen as well. That's where it comes down to, especially for that question. So loads of detail on there. Follow the technique and you'll be perfectly fine. So coming on to part C now, and this is where we get the trigger words. In terms of it, this technique will really help you, not just on this exam, any exam. Comes up all the time. So factors that may limit the usefulness of the comparison with the business sector averages. So when I think of limitations, or is it useful, those are the 4 key words at the top there. So what differences have we got? What consistency issues are there? Is it comparable? And what sort of distortions are there as well? So this really comes down to, what did we pick up in the question, stating what that difference is, and then why, coming to why does that matter in terms of it? And as you can see on the actual side on here, these are my buzzwords for it. So picking up on the accounting policies at the start. So in other words, Bun Company may work on different accounting policies than different companies in the sector average. Why may this be a problem? Well, this may actually impact on depreciation policies, valuing of assets. 1 mark in the bag. Secondly, as we pointed out up above, Bun Company owns the shop. Well, some of the competitors may have a different business strategy and business plan and rent it out. Again, you're comparing chalk and cheese there potentially, and that may skew your actual ratios, owning versus renting. Number 3, notice how he picked up on this in the actual start of the question. It's year ends. They had different year ends. So why is that an issue? Well, there may be seasonality in terms of when the actual goods are sold more often. So they may actually sell more bakery goods in the winter that may benefit a December year end. You never know on these sort of things. Number 4, in terms of definitions, this particularly applies to the ratios. There are hundreds of definitions for ratios and what to interpret. So if some professionals from the sector average use one formula and we're using another, well, they aren't comparable, are they? We're not going to be consistent on these. Number 5 on there, we've got the actual calculations. So we've got sort of averages on there. We've got also about the popular brand name as well. So we've got many companies included in this sector may not be a good match for the type of business strategy. So some bakery stores, but they may not be cafes. So this is the operations as well. How can you compare an actual cafe to someone who maybe does corporate events? It doesn't work. They are not comparable. They're not in the same market percentage in terms of size. So how can we make any justifications from it? And then finally on there we've got the actual strategy. So another trigger word mentioned in the question was we had a gross profit margin of 20%. Well, what if we're doing low-level, inferior bakery goods with a margin of about 5p versus an actual, more sort of premium branded product that has a gross profit margin that we have at 20%? This is where the difference is completely, how can we compare one to another in terms of it? And that's looking at the affordability of the actual products, low margins versus high margins, or high volumes versus low volumes. And that is how you do a full question analysis. Well, what about that? That, in my eyes, is how you should be analysing an ACCA question and answer top to bottom with notes, highlights, key terms, trigger words, and those ACCA techniques that we talk about on the channel so much. If you found today's video helpful, and as you can tell, it took a bit of work to go through it, feel free and please drop me a like down below. It really helps the YouTube algorithm, and I appreciate all of your feedback as well. Feel free to drop any comments as to any other topics you'd like me to go through, and any other videos you'd like to see in the future as well. The actual articles and everything we've gone through today are in the description below, so feel free to put them with your revision notes, pause the video as you go through, and I really hope it helps with your upcoming exam and you pass it. Let me know if you do. Prena, I hoped it worked for you today, and good luck with your actual exam as well. So, as always guys, on that bombshell, I'll see you next time. Cheers.